This weekend, we saw further escalation in the Middle East with the U.S. launching strikes on 3 Iranian nuclear facilities, according to Trump. He gave a speech or a press conference kind of thing about this, and I can imagine that we are in for an interesting week ahead, as this definitely increases the kind of tone of what's going on, because before this was an event sort of between Israel and Iran, but now with the U.S. taking another step and getting more involved, I do want to show you guys here, because it is the weekend and the markets are closed. That is, except for Bitcoin, the only thing we can really go off of is Bitcoin. And you can see here, I'm looking at a 1-minute chart this morning here, and what you can see is that we've had a pretty sharp drop over the weekend. So you can see Bitcoin has continued to push lower, which is just an indicator. Typically, Bitcoin and indices move together. So we have seen a decline in the price of Bitcoin, sitting around 101,000. In this video, what we're going to be doing is talking about how this could potentially impact indices, currencies, commodities like gold and oil, etc. So all I ask as we get started in this video is if you could hit the thumbs up button, subscribe to the channel if you're new. Let's get right into it. So I do want to just take a pulse check, as I've been doing on these Sunday videos, quickly on the commitment of traders data, just to see what institutional money seemed to have done in the prior week. And so what we can see is some of our biggest buys, maybe not coincidentally, there was some big buying of oil, which is going to be a subject of this week. Is there the potential that oil continues to shoot higher off of this? It's very possible, right? This is another step when the U.S. gets involved. That definitely has the potential. And again, I think most people are on the hopeful side that there will be peaceful resolutions at some point here. But with the U.S. getting more involved, it is very possible that oil will be shooting up this week, or could continue its climb that it's already been on, rather. And what we can see here is that the change in long contracts and change in short contracts tell you a lot about what institutional traders have recently been doing. They decreased dramatically their short exposure in the latest filing, and they increased their long exposure. Very interesting given the environment that we're in here. And we can continue. We can see they bought some silver, bought Canadian dollar, euro, dollar. There was some net buying here. And then kind of gets into the NASDAQ, which is sort of middle territory. But what I found really interesting here, and we can see the latest updated number is actually June 13th. So we're actually looking at older data. So still worth mentioning, but something to think about is the last round of reported data. We also saw some selling in the indices. We'll see how things progress from here. So going to the top setups page here for a quick second, what we can see here is that gold, silver, these things are still on the top of our list. I have been looking for some long setups in gold, and with geopolitical headlines kind of flaring, it's not particularly like the reason why I'm wanting to buy gold. There are other other than geopolitical factors. There's also economic data statistics that I think favor the upside for gold. Things like cooling inflation, slowing economic data on the labor side. These things, I think, will pressure the Federal Reserve to cut interest rates. However, with rising oil prices, this could throw a wrench in the inflation story. So we'll talk about that in just a moment. In terms of gold, however, I'd be interested in a pullback to around this 3280 level of support, which we found support a couple times here and pushed off of. So I'd be curious to see if we could get this kind of move, which could maybe break us out of this consolidation zone that we've been in. But recently I spoke to a popular trading friend, Blake Morrow, and also Chris Pulver. We were having a conversation together on the trading battle. And they were both kind of in agreement. I thought this was an interesting concept, that typically in a strong trend, a kind of consolidation at the highs is a very bullish sort of pattern, which many people would know that as like a flag pattern or something like that. So is gold doing this one long, slow and steady flag before shooting higher? I actually think it's very possible that that could be the scenario. So I do like gold to the upside. It is a top setup within the Edgefinder's top setups indicator or algorithm. Basically what this does is look at sentiment data, technical data, and economic data, like what we just looked at with the commitment of traders data. It's considering automatically what that data is telling us for us. It's looking at things like PMI data, retail sales, inflation statistics, and generating an overall score or bias for these currency pairs, commodities, and indices. So I'm watching all this stuff. I think that's really interesting just to see the top of the list still has silver and gold through this. On the bottom of the list, we have the Australian dollar pretty heavily getting sold here, getting a bearish reading here. So would be a little bit more on the bearish side of that. Let's push forward here and take a look at some more charts. By the way, if you want to check out the Edge Finder, there is a link in the description down below. So going on to indices here, right? So the S&P 500 is also likely to see some pressure due to this, right? Because of course, people in general the wars are scary, right? And the potential for war is scary. But also on top of that, there could be the fears of an inflationary pressure that comes from this, right? With rising oil prices and the potential for more military spending, right? It's kind of like why the euro shot up so much recently. There was this idea that, okay, well, if there's going to be more funding for the war from Germany and things like that, that could cause some higher inflation, right? So anyways, taking a look at the S&P 500, we're consolidating here. I've been mentioning that a pullback, as long as it's not destructive to earnings, would be a buying opportunity. So yes, even though this is potentially a scary time and we could get some downside, if we get pullbacks, I am a buyer around 5,800 and 5,600. I do like the idea of potentially picking up some more long exposure. I already own a good basket of stocks from the sell-off that we saw in April. So I did quite well in terms of the individual stocks that I bought, and I'm also long a Russell position that is likely to get trailed out for profit. I could show you that really quick. So Russell likely going to get trailed out of profit this week if we see any. With the reaction this Sunday open, I would not be surprised to see index futures lower here this evening. So if that happens, there's likely a chance that I'm going to be out of my Russell position, which is fine. I'll move on to the next one, just take a small profit on that one if I can. I'm also long the DAX. This is likely going to get stopped out. So this trade did not work out well so far for me. So it happens. You're going to have winners and losers, but I do like the DAX, so I'll keep an eye on that one to see if we can get kind of a break back above. If we start to trend higher again, find some higher lows, then I'll look to get back into that trade. NASDAQ also looks really good if we can either get a pullback, which I think is more likely, to this 20,800 level, or if we get a break through these highs, I'd be really interested in just riding that upward trend in the NASDAQ. Why do I like these so much? Well, the general consensus here for me would be that most of our inflation data is cooling off, which I think suggests rate cuts are likely coming. However, there's been some more mixed reports recently with economic data that makes me a little bit nervous, right, with the PMIs coming in really soft. So the thing is for me with the indices is I do like them, but I'm going to be selective with entries that I take. So I would need to have good pullbacks, etc. Where I'm a little bit more interested actually right now is back to the metals. Going into this year, I did really well because I essentially was long the metals into the first couple months of the year. I really was focused more on commodities, and I was not super interested in indices, which were sitting at all-time highs, kind of how they are now. Whereas with metals, I liked the setup quite a bit and did really well with my gold longs in the beginning of the year. However, now what we've seen is the environment has, to me, kind of gone back into this, okay, we have some wobbly economic data. The Fed wants to kind of hold rates, but I think that they're going to ultimately end up cutting interest rates this year. And we'll see where all that goes. But I think rate cuts and geopolitical tensions make a convincing narrative for me to look to add some long exposure. So I went long silver on Friday with a stop loss below this structure here. So if we do get a shoot lower here this week, I'll just take a small loss. But if we can get a runner here going, I know there is a take profit here, but this is not actually a take profit level for me. I am simply interested in trailing stops here. So if we were to get some sort of breakaway movement like this, then I'd be looking to trail my stop into profit further. So that is the goal with the silver trade, and I would like to also add in a gold trade. I would like to be long both if I can get that set up going into this week. Really quick, I just want to remind you guys that this VIP sale that we're doing is ending really soon. So if you're interested in getting 40% off the VIP group, every time I take a trade signal, I share it, or a trade, I share it as a signal inside of our VIP group. So basically, we have a community chat room here available to members. You can also see all the trades being taken by myself. Alan also is a Forex trader, and Ivan as well, also a Forex trader. So I trade commodities, I trade indices. So anytime I take a position, like here's that silver trade. So if you want to get notified whenever I take a new position, you can sign up here currently for a 40% off discount. All you have to do to get the 40% off discount is check the link and promo code in the description down below. You can follow along with any trades that I'm taking. They will get notified directly to your phone or to your desktop like this. And it makes it really easy just to keep an idea of what I'm trading, but more importantly, why I'm taking the trades that I'm taking. So every trade that I share a screenshot behind why the trade was entered, the logic behind the fundamental analysis, technical analysis, and sentiment analysis, my entries, my stops, etc. So I mentioned I'm trailing stops here, so I don't have a target, but I have my stop and entry here. And so my plan is to, again, look for a series of higher lows and higher highs to manage the trade. So if this would be interesting to you, if you'd like to get involved in a chat room, we have a really great community of people in here from all over the world, and we have traders from different parts as well. So we're very active, and it's a great hub if you're looking for people to trade with, but also people to learn from, right? We've got a collection of really talented individuals leading our trading community here, and so it is an opportunity to get more involved with people who are doing the thing that many people are working towards and maybe struggling on. So if you'd like to get access for 40% off, the link and promo code is in the description of this video down below, and I hope to meet some of you guys in the chat rooms. Okay, so let's now move really quickly to WTI. So this is oil, right? Oil likely to continue to have a move higher here, I would imagine, right? Unless there is some sort of between now and the end of the day, which is very possible, some sort of negotiation or stepping back or conversations that don't escalate. If you get any further escalation, oil could completely rip to 100. Which would really throw a wrench in the circumstance around inflation right now. So if I'm looking at oil, right, we've seen level after level breakout, right? We've seen some big levels of resistance be taken out here. Now we're sitting at this longer term downward trend line here. And I want to just address, where oil is, right? So people are saying, people are looking at oil very closely because they're saying if that thing keeps going, it could really cause an inflationary problem. But I do want to also put in perspective that for the most part, we are around levels that we've traded in for quite some time. And just remember that we did have a lot of disinflation with oil prices in the 70s and 80s. So it's not the end of the world that oil prices are at this level, but it could become more problematic if you get further breakouts and we start going back towards like the 90s, right? This would be very problematic for the inflation story because remember that oil is an input to everything else, right? When it comes to goods, if you buy something at the store, the price that you see is heavily impacted in the chain of things by the transportation costs, by the movement costs, right? So the cost of oil is a really impactful thing to inflation. So we don't want to see rising oil prices continue too much further. They do cause a problem for that story. So we'll keep an eye on it. But unfortunately, with escalation, likely oil prices will continue to push higher. And I imagine that in the futures, when we open up in the futures market tonight, there's a good chance that oil prices are higher. And again, they've been just skyrocketing already. But this is the nature of oil; it's very sensitive to geopolitical events, and so war and concerns about war typically do cause the price of oil to continue to push higher. I already mentioned Bitcoin down here 1.5% today at the time of recording this. Take a look at some currencies. How could this impact the currency stuff? Well, actually, I think this is a strengthening factor to the dollar, right? So dollar may actually catch some strength here, which could push euro lower in the meantime. Although, the dollar has been under scrutiny due to the trade stuff, the trade dynamics, there is also, some importance here that the U.S. dollar in times of war is still the global reserve currency. So there's that pressure, I would imagine, for buying dollars going into this week. So I actually would take that as an opportunity to potentially get long some of these currencies that I like more than the dollar. I don't love the economic data for the dollar. So if you get a sharper pullback in the euro dollar, that would be a buying opportunity in my view. And I believe it's also, it's a top setup on the Edge Finder. If we just score really quickly just the currencies, what we can see here is that euro dollar is the strongest of the dollar crosses. So probably euro dollar would be the most promising setup for me going into this week. If I take a look at some of the downside, we do have the Australian US dollar, which is still a dollar bullet. Actually, this is interesting. We have a bearish bias on Aussie dollar and a bullish one on euro dollar. So there is that possibility I could even sort of be hedged but play both sides, which would I do that? Possibly. I also like dollar CAD, but dollar CAD lost some of its bearish scoring here, so I'm probably going to put that one on the shelf for now. But biggest one would be bullish setups on euro dollar if we did get some further retracement, which I do think is possible with the news that we've gotten over the weekend here. At the same time, we've got pound dollar sitting here at a key level of support. So we'll see if that can continue to push higher. Dollar yen sort of still in consolidation, but in the context of what has still been a pretty strong downward trend over the last, over 2025 so far. Dollar Swiss sitting here just bouncing off of support. Dollar CAD is one I am still going to watch here to see if we do get a uptick in the bearishness department on the edge finder. If we do so, there's a possibility I could get short on this one and continue to trade that one in favor of the dollar bearish direction. The Australian dollar getting a bearish reading in the edge finder. I'd like to see that score strengthen to the downside a little bit more. Maybe see if we can get like a -7 score on the edge finder. That would be a nice extra kind of confirmation. If we saw something like this, I've been watching this level for a little bit here. Or if we go back to the highs and the score is even, at where the bearish level is even higher or than it is, or at current levels, I may be interested in potentially picking up a short on the Australian dollar, which is very sensitive to risk-off environments. Remember that the Australian dollar is very sensitive to what's happening with the Chinese economy and also the global economy because of China, right? So if we have, a risk-off environment, typically the Australian dollar will get sold as it is an economy centric around commodities, like selling commodities to China for production. So if there's less demand for that, it can cause the Australian dollar to weaken. So we'll see how that plays out, but we'll be watching this one. The Kiwi dollar also rolling over a little bit here over the into the week. Euro, yen, pound yen. I thought this was interesting. How's the yen going to fare in all this? Well, I would imagine that there will actually be a bounce back in the Japanese yen, which could cause certain currencies here to actually move lower. So let me just see. On the edge finder, we are looking at Kiwi yen getting a bullish reading, dollar yen, and that's pretty much it. So in terms of the yen pairs, we have a couple yen crosses getting some bullish readings. So if they do get some bigger pullbacks, right, I'm looking at like things like CAD yen, which the Canadian dollar likely will see some downside initially. Yes, oil prices can drive them higher, but remember that the Canadian dollar is also subject to many of the other major developed economies where they're not necessarily a safe haven currency. So the Canadian dollar could get hit even though oil prices may rise. It's not a perfect one-to-one correlation there. And so the Canadian dollar, like the British pound or the euro or the Australian dollar or the Kiwi dollar, those things can fall on risk-off kind of environments as people flock to the dollar, the yen, the Swiss franc, and gold. And sorry for the yawning, but I'm actually getting off of a really, really busy wedding weekend, but I wanted to make sure to get this video out to you guys. I also wanted to just mention that if you are looking for a better broker, down below in the description, we've consolidated a list of really great brokers that will give you sign-up perks when you sign up with them. Now, I have relationships with multiple brokerages that all can be found down below in the description, or if it's easier for you, head over to a1trading.com/brokers. And if you explore each one of these, you can go by country, or you can go by, by product. And when you do this, you'll see there's sign-up perks available to you guys by using those specific links. They've selected, special offers to offer to you guys. So I want to make sure to pass those on to you. And if you use our links, you'll also be supporting my YouTube channel, and I really greatly appreciate it. Happy trading ahead, and thank you very much for watching. Remember, last thing, remember the 45% off sale for the VIP membership is ending very soon. Thank you guys for watching.